going to talk about dollar cost averaging today. This is a fund I bought on the 22nd. Invesco, developing markets, follows emerging markets. It's basically investments in like Asian funds, European funds, overseas markets. So I think it's a good idea to have some money invested in non or international investments. Right here is when I made my buy, and it would have been great, yeah, if I bought down here. When it got down to here, I was hoping for it to get down to 35 and then make that buy, but it shot up. And then when it shot back down, I said, I'm just going to have to take it at that. And maybe it goes down more. I'm prepared to buy more. But I think the next month might be good news. So this market might be going up, and hopefully this will go up with it. So I dollar cost average by buying, and then I hold and look for another opportunity to buy. So I've been holding this for quite a while, looking for opportunity to buy, but the emerging market really hasn't been a strong place to invest. So I just kind of left it there and let it do its thing. But on the 22nd, I decided to make that buy. I got in at 36, which means I'm down 20. I got in at 28% drop from my last purchase. So instead of just dollar cost averaging like a lot of people do when they put their money in their 401k, it takes money out of their paycheck and it just automatically buys on that day when it goes into their 401k. Myself, I load money in the money market. So instead of buying through 2022, 2023, I just kind of left that alone. I didn't want to put any money in that. So I was been looking for a good opportunity to buy. I made that buy. It would have been great if I bought on 1024, but when it hit its low at 35, so I missed it by about $1. But when I make that buy, what I'm doing is I'm watching this ticker symbol, which is the Invesco funds. So it's not a very high rated fund, but it's the only emerging market I have in my 401k. So that's what I'm going to have to buy to be invested in the emerging markets. Now, normally what I do is I just go right to my chart, and the first thing I look at is my 3-month chart and to see if it's on a low. So yeah, it would have been great to hit that down there when I should have, back on 1024. But it was a swing and a miss. And if I look at my 6-month low, I'm still down for the 6 months. We're still pretty low. And 1 year out, so I could be buying on a 1 year, close to a 1 year low. And if I go out 2 years, 5 years, you can see in the last 5 years, look how much it's gone down. So if it goes back up to its potential where I bought it in at 50, then I could sell off what my purchase was at 50 and be holding in at a lot lower price. Anyways, that's what I do for dollar cost averaging. So a lot of brokers will tell you just buy and put it in there, and I get it because people don't pay enough attention. They don't move money around. So if you're watching the market, though, you should take advantage of the ups and downs and buy on the dip. So right here is when I should have been buying back in 2022. That's really when I should have bought in at 30. But I was more invested in the tech stuff and wasn't as interested in the money market funds or emerging market funds. So I was putting most of my energy investing in there. But it would have been a good opportunity to buy and make up for some of the losses I had from down here. So I'm buying down here, hoping for the market to turn around in the next month or two and see what happens. So I also, when I go here, not only do I check that the charts, I check the holdings, and unfortunately, I don't have. Oh, sometimes that holdings doesn't show up, but here's the holdings right here. I click on this holdings. These were all in the red, so if these are all red, I buy. And you can see today I see a lot of green, so that means at the close of business my stocks most likely will be up, or my mutual fund will be up. So the stock market closes at 1 p.m. Pacific time, and the mutual funds don't release the numbers until around 4 or 5 o'clock when it gets all tallied up. So I wouldn't know till 4 or 5 o'clock tonight. It's one of the reasons why I don't like mutual funds is you have to wait till the end of the day to see what your prices are going to be. That's not my only indicator. I also follow the EDC. So this is the emerging markets funds, the directions fund, I am invested in this, and also I see this is up 4.5% today. That will be an indicator to me today that my investment would be going up. If this were in the red, then I'm looking for that as a buying opportunity. So red is buy, green is sell. Currently, I'm holding because I think that I've got a good chance to run for the next month or two. So we'll just follow that and see what happens. I'm going to go ahead and close that off. I also follow the EEM. This is an index. iShares follows the emerging market and it's up around 1.5%. So the direction funds, it triples whatever this is doing, or just a little bit under or over depending on which way it's going. But this is probably what I could expect to get. Whatever the percentage gains is in this fund is probably the percentage gains I would have in my fund. So again, all I do is I check these three. I look at the charts and I look at the holdings to see where it's at, and that's how I determine whether I'm going to add money or reduce my shares. So currently, again, I have this purchase and I've been sitting on it for a long time, so it's time to buy more. I've been sitting on a lot of cash waiting to find something to buy, and I'm just off the low, all-time lows, so I'm making my buy and taking a chance. I feel like 2, 3 months, 1 year is a decent risk for where this fund could potentially go. All right, and these are my indicators, so hope that helps understand how I do my dollar cost averaging and how I go about making my buys when I'm doing my buys.